Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, 2 more US rate hikes are still likely this year. The US Fed upgraded its assessment of their economy in August, according to the release of minutes from its last meeting, even as it kept its interest rates on hold. It said it still plans to tighten monetary policy at a moderate pace. It signalled it will raise interest rates again in September, and traders are currently pricing a 94% chance of an increase then and a 65% probability for another move up in December. These would come after earlier hikes in March and June this year, making a total rise of 1% in 2018. The US dollar dipped on the news, but the US Treasury 10-year yield remained unchanged. Policy eyes are now shifting to the Jackson Hole meetings, and there seems to be no economic fallout from the US political uncertainties. The level of home resales in the US fell again in July for the fourth straight month. Volumes fell 0.7% in July from June to an annual rate of 5.34 million units. It is their longest downward slide in 5 years. Rising prices and higher mortgage rates price more potential buyers out of the market. The median existing single-family home price was $272,000 in July, up 4.6% from the same month in 2017. Canadian retail sales took an unexpected dip in June, mainly through the restrained buying of petrol. But this comes after a big surge in May, so probably we're just seeing a rebalancing out here. Today's data isn't expected to knock a positive GDP result when it comes out on Friday next week. And American and Mexican officials are close to resolving some of the sticking points that have stalled negotiations to overhaul the NAFTA agreement. Mexico's chief trade negotiator said this overnight. But what the Canadians think about all of this is still unclear. Saudi Arabia is reported to have cancelled its plans to sell shares in state oil giant Aramco, which has been billed as the largest share float ever. And US Treasury 10-year yield has now retreated over the past 24 hours and is back to 2.82%, with the 210 curve just down to just 22 basis points at its 11-year low. Perhaps this is where the US political uncertainty has been reflected. And the Aussie government 10-year is at 2.54% unchanged, the China 10-year at 3.65%, down 2 basis points, while the New Zealand government 10-year is at 2.62%, also unchanged. Gold is unchanged as well, at $1,195 an ounce in New York. US oil prices, however, are up sharply to just under $68 a barrel. The Brent benchmark is now just under $75 a barrel. This rise is due to the effect of the new US sanctions on Iran. And the Kiwi dollar is starting today at a very similar level to yesterday at 67 US cents. On the cross rates, we're firmer at 91.1 Aussie cents and 57.8 euro cents. That puts the TWI at 70.6 and is still at its 4-week average. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.